Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. I want to share with you guys today 5 world-class companies that are trading below their intrinsic values right now, and the market is sleeping on them. From semiconductors to software to healthcare, these are the type of companies that you want to hold and buy right now while they're still cheap. Investing is very simple. People overcomplicate it, especially if you're buying stocks. And what I mean by that is, if you buy ETFs, you're just buying a basket of companies that have done well over a period of time, hundreds of years, managed by some of the best managers in the world, and pay you either dividends or price appreciation every single year for foreseeable future. These are well-run businesses. If you do your research and find it in big companies that are trading right now below the intrinsic values, they meet the criteria that you set for yourself. So you might want to say, I want companies that are, that have a high return on invested capital, for example. You want companies with excellent free cash flow, companies that pay you dividends. Whatever your criteria is, you set your criteria, you find these companies, you do your research and find out everything you need to know about the business. You buy them and hold them for a long time, and it will pay off. I've done it. It works, and I'm not saying I'm a guru or anything like that. I've made mistakes and I will continue to make mistakes. But one of the major things that worked for me is the fact that I did the research, I bought the companies, and I ignored the noise, and it worked for me. I'll give you a great example. Today, after we finish with this video, go away and research about this company. Very simple business, okay? One of the oldest companies around. They've been around for a very long time. I have, let's go back here. I have 12 shares of this company. I had 17. I sold it 5 not long ago. And just to be transparent, I will show you exactly what basically what I sold. So I sold 5 shares of this company. Let's find out. There we go. So there we go. There's 5 shares. It was split into 3, if you like, 3 sales. But let's just click this, and I made over £500 at the time when I sold it, just for basically selling these stocks here. Yes, I took some profit off the table at the time when I thought it was expensive, but the company continued to go up over the last basically months, and right now I'm up 97%. I've doubled my money, and all I did was buy this company when it was undervalued. At the time I was buying, it was very cheap. It was one of the cheapest industrial stocks out there. So I bought it, I held it, and I'm still holding on to it. So it's really simple. Buy high quality businesses and hold them for a good period of time. I think the first time I bought this company, let's just go back history wise, and I want to see if I can find when I first, May 2021 is when I bought basically 0.3 shares of this company, and at the time it was trading $264 per share. Okay, let's now go back and have a look. Now it is over 400 something. Okay, so it is important to buy these companies when they're undervalued, and this is why I always said buy them when they're cheap. Don't buy when companies are very overvalued. And I'm going to share with you today 5 companies that I genuinely believe are great opportunities. I'm not saying go away buy them. I'm saying go away and do your research, inshallah. Let's now have a look at the way the S&P 500 is. For the year to date, we're looking at 16%. The Dow Jones about 12%. The Nasdaq is 23%. So it's done absolutely amazing job. And the FTSE 100 is about 17, almost 18%, which is really good. Really good. I like the fact that FTSE 100 has done really well this year. And I hope that continues, because there are some companies that I'm interested in the FTSE 100, and if they are basically giving us the total returns the S&P 500 and the other companies in the US are, then potentially I'd rather own UK based, not rather, but I would love to own some UK based companies. Right now I only got 3 in this portfolio, so we'll see inshallah how things go. Now if you look at the fear and the greed index, that's on CNN, you can see right now it's still on fear. So things can easily change. It is important to focus on the long term and buy these companies while they're still undervalued. So let's look at the 5 companies today. And as always, I'm going to share with you the same information. The two bits that I've highlighted is the yellow bits, the moat of these companies. Every single one of them has a wide moat. That means they've got a durable business that is not going to be affected by newcomers in the market and so on. They are market leaders when it comes to their sectors, if you like. Free cash flow is another thing that I'm looking at today. So for excellent free cash flow for each one of these companies. And the first one we're looking at today is probably one of the best companies out there. It's after ASML. This, I would say, is probably the market leader. It is the market leader, and it is the backbone of the global chip industry. It produces about over 90% of the world's most advanced semiconductors used in Apple. So Apple's new, phones and everything, Nvidia's chips and AMD chips. Right now, it's currently trading $300 per share. They think the price should be $310 per share. It has excellent free cash flow here. So free cash flow over almost $29 billion. When it comes to profitability and the effectiveness of the managers, probably one of the best run businesses out there. EPS expected to grow about 20%, revenue is about 20%. A year to date is up a lot. It's over 50%. It's closer to 52-week range, but it still seems undervalued. And if you look at here, you can see it's about 11% upside from where we are. Now, if you look at fast graph, for example, and if you're looking at the forecast for this business using the estimates of that 22, which is where the company has been trading, that fair value price for the last whatever years, if you bought this stock right now, you'll be making, by the time we get to 2027 December, so 2 years from now, you will actually have 11,700. Okay, so you'll be making about 7% total annualized rate of return, which is quite nice. If you use the normal multiple, which is Mr. Market likes to trade this company, which is that 25-26 PE, then you'll be making about 14%. So it's slightly doubled. So about 13,500 is what you will have. The next company we're going to look at today is SAP. SAP is one of the, when it comes to software, they are the powerhouse when it comes to that software side of things in Europe, for example. They serve over 400 enterprise clients globally. It's successfully transitioning from on-premises to cloud-based recurring revenue, which is quite nice to see. So similar to what other companies are doing, Salesforces and so on, so and so. And as you can see here right now, it's undervalued about 20%. They have excellent dividend safety of 99%, which is quite nice to see. Profit margin of 19-20%, return on equity of 16%, return on invested capital 13%, and $7.5 billion of free cash flow right now. They're expecting the earnings to grow 22% and revenue about 11% in the next couple of years. Just like the rest of the software companies out there, this one hasn't done well this year. It's about 6% up in comparison to that 16% for the S&P 500. And as you can see here, it is a buy from Wall Street, and it's about 30% upside from where we are. We said about 20% here. And looking at fast graph, as you can see, if we use the normal estimate, the estimates that this company has been trading over the last, the normal estimate for this one, its fair value is about 20. If you buy it right now, you'll be losing money. But if we use the normal multiple, which is that 23 average for the last 5 years, you'll still be losing a little bit of money. But according to Morningstar, it's actually overvalued, basically undervalued at this point in time. So again, you have to take that into consideration and also look at give yourself a margin of safety on top of that. Novo is another one that has been, we talked about this. We talk about it weekly. It's reporting next week. We'll see what happens to the company. But this is it's got the blockbuster drugs like Ozempic and Wegovys, and they are the leading company when it comes to obesity and so on. We know what they do, but right now Mr. Market is sort of ignoring this company, and they think that it's just gonna go to zero very soon. But right now it's got amazing free cash flow. Its dividends is absolutely amazing. Well-run business overall. Very inevitable company. Innovative company, if you like. EPS is expected to grow about 6%, revenue is about 5%, 45% upside from where we are. So you can give yourself whatever margin of safety you want. But this company, it is a buy for me right now, and it will be a buy, and I will continue to buy, and I'll tell you exactly how many shares of this company I own, inshallah. And looking at Seeking Alpha, a year to date is down 42%. The 52-week low was 45. Right now it's about $4 away from that. If we look at Wall Street, okay, you will see about 20, almost 22% upside from where we are. Now, if we look at fast graph, for example, and we use these estimates here, okay, right now, if you bought this stock, if you bought it right now and held it until 2027 December, okay, you will have almost the $3,400 top of the money that you've actually initially invested. If we use the normal multiple, which is about that 30, which is absolutely ridiculous for this company right now, your 10,000 will become 26,700. So you will triple almost your money, which is absolutely wonderful to see. So again, wherever you look at, this company is still undervalued, and in my opinion, it's probably one of the best ones out there. And same goes for Salesforce, another one that's sort of forgotten. No one wants to talk about it. Everyone thinks this company will die because of AI, not knowing that they are part of the companies that have started using AI and embedding AI into their basically into their day-to-day runnings of their business. And eventually, once everyone is now investing in AI, but not many companies are actually showing profits. Basically that they made through the use of AI yet. So monetization side of things is going to take a while, but we will see what happens to this company over the next couple of years. But it's another one that is undervalued right now, about 25%. So free cash flow over $12 billion, and the company is in a great position in my opinion. And we'll see what the next earnings report says, but so far so good. Nothing absolutely to worry about. I promise you, I'm not trying to convince anyone to go away and buy these companies, but I'm showing you what's available, and it's your decision to basically to do whatever you want to do with your money. Of course, year to date it's down about 22%, and if we look at Wall Street's, we've got about 33 strong buys, which is ridiculous. 27% upside from where we are. If we use that 15 PE estimates, then we are losing about 7% or so. If we use the normal multiple, which is about that 40, again, that's a bit ridiculous. I would probably say about 28 will be the right sort of multiples for this company moving forward. So you'll be making about 22% on top of your money. So your 10,000 will become 15,700 by the time we get to January 2028. And the final company we're going to talk about today is Adobe, another one that's undervalued. And we talked about this one so many times. They're still the market leader. This company is probably one of the best when it comes to look at the profitability, the profit margin, the return on equity and return on invested capital. And these things are not declining. So if the business was basically just doing absolutely terrible, then you will see those margins will have declined. Okay, so profit margin, return on equity and return on invested capital, probably one of the best out there. And the company, the fact that they have that recurring subscription models, they will continue to hold. Yes, there is competition coming in the market, but they are still the market lead, and they have excellent free cash flow over closer to $10 billion right now. They expected the earnings growth double digits, 12%. Revenue growth is 9%. They are investing in AI. Things are changing with the use of AI, but this company needs to make sure that they have, stay competitive because of the use of AI. Because Sora is now creating all sorts of crazy videos, and it's only going to get better with the data and everything else. So yes, they've got Firefly and all of these things, but let's see how things go. So there is a bit of a question mark with the future side of things. But right now, as we speak, it's still undervalued over 65% according to Morningstar valuation. Let's have a look at the let's look at here and see where we are. So right now, year to date is down 23%. For 1 year, it's down 29%. If we look at Wall Street expectations, 20 strong buys, 5 buys, 12 hold, and 3 strong sales. 33% upside from where we are right now. $452 per share is where they think the price should be. If we do the same thing here and have a look at where this company, that's the wrong company. No, it is the right one. Okay, so if we look at the estimates, for example, moving forward, so that's that 15 PE for this company. Okay, that 15 PE is what we're looking at, and it has a blended PE right now, a blended PE of 16. So if you bought this stock right now using the 15 PE, that is, by the way, you would have 15% total return in 2 years time. So November 30th of November 2027, okay, you will have basically extra 1,500 on the top of the 10,000 that you've invested. If we use the normal multiple, which is what Mr. Market likes to trade this company, which has been what, that 38 PE on average for the last 5 years. Check this out. You will triple your money. 10,000 will become 29,429. Now, I don't think that's possible right now. The normal, I like the fact that this is very moderate. This is safe. This has got a margin of safety. Okay, so that 15 PE, and if you look at the forward PE for this company, let's have a look. That's 16 forward PE. If you look at the earnings expectations, okay, moving forward, so we've got that 12%. So let's look at the November 2026, which is next year. That forward PE is about 14, then 12, and so on. So if we're using that 15 PE, you can't actually go wrong. So it's really an interesting one that is in a very tricky situation right now with AI and everything else, but it's a solid business. Every single one of these companies, in my opinion, are great companies. You wouldn't have a wide moat. You wouldn't be basically producing this type of profit margins with this free cash flow and these sort of expectations without being in a high quality business. So go away and do your research and find some great companies out there. Sharia-compliant side of things, absolutely nothing to worry about. Each one of these companies are in a very good position, and a lot of them is because they are in the IT, in the technology side of things. They normally have a low debt and all of that, all of those things. So that's the 5 companies I wanted to share with you guys. I hope you're enjoying this type of content. I can show you Salesforce. Adobe is in the family portfolio. If you want to check that out, come to the Patreon account where you get access to a lot of things. And then right now I'll show you Novo. I've got 105 shares. I'm down about 25%. My average is $66 per share right now. I'm bringing that down. So every single week, moving forward, inshallah, from starting next week, I'll be buying 1 share of this company moving forward. I started it just last week, and I'm going to continue doing that, inshallah. The next one that I want to show you is Salesforce. So I'm now up about 7-something%, 20 shares here. I also own it in the family portfolio, and I'm going to continue to add to this one if it comes down again. So right now, for 230, let's call it 240 and $183 and pounds, if you like. So we'll see what happens overall, but that's what I wanted to share with you guys today. If you're enjoying this type of content and you genuinely getting some value out of this, subscribe to the channel, of course. Let me know if you have any questions, and yeah, have a great day. Assalamu Alaikum.